What's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and macro market update analysis video. Today, guys, is going to be a bit of a different video. I do have Sean on the other side with me today. Sean, say hello to everybody.
Good morning, everyone. Krisha, are you excited? I'm super excited. I haven't slept much. I have my coffee here with me.
Yeah.
Man, loving the markets.
It's gonna be a very interesting well, it is already a very interesting week. So anyways, I don't want to like jump the gun. Let's go over this video in a very systematic way. I do have some pointers, and Sean, I wanted you to be here on today's video primarily so that you could give them your thoughts, because you are, in my opinion, like, you're very adept at, well, just, understanding, much of the plumbing. So that's why I wanted you to be here for today's video. I think it's a very important juncture of the market that we're currently in. So are you ready for this?
Okay, yeah, I am. But first off, you give me way too much credit. I'm not that
Ah,
much of an expert, but I'm gonna do what I can do for you guys is break it down to the best of my ability, so you guys understand the more complex nuances of what's going on out there. That's what I'm gonna try and help you guys with.
Okay, so and just for the layman over here, so if you guys are new to the entire space and you only care about the TA, I will be including timestamps in the description below where we get right into the TA. So Sean, I think what people are really thinking in this particular market juncture is, was this entire thing right here, at least the past few hours, is this one big bull trap? That appears, I was just I was looking at into our Discord chat, I was looking into Twitter, social, everyone's wondering, okay, is this one big bull trap? Does Bitcoin basically trap people right here and then plunge again, getting back into, 19.8k, perhaps even lower, perhaps even down to 15k? So I think this is something that I want to target in today's video, and yeah, your thoughts on it would be freaking amazing. So I have a couple of points I first want to go over. Okay, now I have my little notepad here. I've taken a note from your notebook, and I am now going to start scribbling as well. This entire breakdown phase right here. So guys, I'm currently Bitcoin. This is Bitcoin on the daily time frame. We have the golden cross right here. This was that massive breakdown point where Bitcoin actually broke that 55, broke that 200 EMA, and then went spiraling down all the way to that 19.3k region. Right now, Sean, in my opinion, I think this was all event-based. This entire dump so far has been like one cascade of events just piling on top of each other that led to panic on panic on panic, that then led to this sort of adverse move to the downside. Because the way I am looking at it right now is that as soon as Bitcoin got down here, okay, what were the few developments that we saw? Number one, J-Pow actually coming out and swinging hawkish. And the second event was SVB tanking, right? That was a good 60% dump, Sean, right?
Mm-hmm.
So tanking, so minus 60%. Now this was what led to the bank run, okay? And this is also what caused the entire USDC depeg.
Yeah.
Right? Because USDC had $3 billion, so Circle, which is the parent company, had $3 billion out of their 44 in, SVB, which is your Silicon Valley Bank. So now the speculation was that, okay, that 3 billion is going to zero, no one's getting that 3 billion back, and that's what led to the depegging of USDC. Now, Sean, there's another sort of development. At least I woke up this morning and I realized that the fourth thing to have gone down was Signature Bank. Now, Signature Bank also is one of the banks that facilitate, these on-ramping. It's one of the on-ramps that many of the major exchanges use. Now, I know that Kraken uses Signature Bank as one of their on-ramping banks, right? But I went onto the Kraken. Yeah, I went on the Kraken website today, but they said that they're still sort of processing deposits and withdrawals using the Signature Bank. So I'm not sure what the weakness is, or how like dire the entire scenario is with Signature Bank right now. Okay, so we have all of these events that, in my opinion, sort of led to this move to the downside. So the way I'm looking at it is that this entire move was event-based. What are your thoughts so far on how this is played out, and the role of these events on price action?
I think saying it was event based is I totally agree it was event based, but I think it's not giving it enough credit. I think this was a significant moment in this current market cycle. This was the market demanding that the Fed do something. Okay, this was all of us together saying that, hey, if you guys remember, when this happened on Friday, or Thursday, Friday, whatever it was, on the Discord, I was like, guys, this is serious. I don't care what people on Twitter are saying. I don't care whether people think this is contained or not. This shit is serious. You guys don't really often see me flip bearish that fast so soon, right? But when it's something of this magnitude, I've read enough historic um, accounts of this kind of thing that spirals out of control, right? If unless there is a injection of confidence that comes in from a external source that has unlimited amounts of money to keep the markets calm, the markets run into panic. It doesn't matter how small that current bank is, because people, all the smart money operates under this pretense: we don't know what we don't know, right?
Yeah.
All smart money operates under that pretense. And even if it's a small bank, that small bank could owe a bigger bank a lot of money, and that big bank could owe another big bank a lot of money. And smart money is going to flee from big banks because they don't want to be the schmuck left holding the bag when things actually catch fire, right?
Yeah.
So unless there's confidence injected, and that confidence needs to come from an external source that has a lot of money available or unlimited printing power, right? Which is the Fed, right? So the Fed needed to do something, and that's what the market was demanding. That, hey, you need to do something. And when the market came into consensus together, all of them saying that, hey, you need to do something, and people start sniffing that out, they sniffed out the fact that, hey, the Fed is going to be forced to do something by Sunday. And then an announcement was made that an announcement will be made, right? So people start positioning for that. So yeah, that all of it was event based, but it was an event of utmost importance because it's a turning point, in my opinion, of the cycle. Because that V bottom, everyone's asking, hey, was that a bull trap? Is this a bull trap? They should
Mhm.
instead be asking, hey, was that a bear trap? Right? I really think that should be the
Exactly.
question.
I think you mentioned something very important there. In all the statements that you made was people, they were basically positioning for the announcement that was to come.
Yeah.
Right. So now we did have announcements, guys. Okay. So there was a major announcement that was made specifically targeting the SVB banking position as well as Signature Bank position. Okay. So there was a sweeping statement that was made, which we will cover, because now what's happened is that, okay, this was the entire risk event right here. So how much of this risk has now sort of technically been, well, put to rest? Right? How many of the market's reservations have been put to rest with the statements that was made and the data that we've received so far? So now we can look at these events. So the way I like to break this down, Sean, and of course you could add, more meat to this, but the way I want to break this down is I want to go over each point, okay, to see how much bearish weight do these points now have. Okay.
You mean moving forward?
Yeah, moving forward. The thing is that from this juncture right here, right? This juncture right here. Well, we had, okay, JPOW came out. He's like freaking hawkish as hell, right? And then we had the whole SVB, the banking, the Silicon Valley Bank tanking in terms of their stock. Then we had the USDC depeg. Then we had the Signature Bank panic as well. So now, how much of this has technically been put to rest? So now I want to go over all of these points one by one, and just to see, okay, what are the developments on that in terms of the data? So so I'll break down the data that we have so far, and then you can sort of give us your thoughts on that. So now JPOW turning hawkish. So he came out a couple of days ago, and it was not too long ago. He turned hawkish, right? He basically went on to say, I'm going to change the color of my pen here, that he might, if the data presents itself, he might increase, I'm just going to put in a up arrow here, increase the pace of interest rates, of rate hikes, right? But the key term that he used there was the pace and data, if the data presents itself. So now, Sean, that data we both know is reliant mainly on, well, the unemployment data that came out very recently. So unemployment, right? And we also have CPI, right? So these are the two key data points that we were looking at. Now we have unemployment that came out, and unemployment actually came out higher than what was forecasted, right? So people technically ended up losing jobs. Now CPI comes out tomorrow on 14th of March. But so far, the way I am looking at this is that unemployment coming out higher basically takes off 1 point from them in terms of increasing interest rates.
Yeah.
Right? Because, I mean, ultimately, interest rates is the price of money. And if you're going to be increasing interest rates and people are freaking losing jobs, that's just going to add more pressure onto various households within the economy. Right? So now I think that was one sort of chink in their armor there in terms of the entire scenario where they actually increase interest rates. So now we're waiting on CPI, which comes out tomorrow. So what are your thoughts on how this sort of plays out in this sort of current market juncture? You think Jay Powell actually has the the firepower to now increase interest rates with everything that's happened so far?
Oh, there's no way. I don't think there's any way he can get away with it without political risk, career risk, and just looking like a complete imbecile at this point. I was really hoping that they could pull off a rising rate environment. The most recent stance where he swayed into a really hawkish posture in the meetings that followed the FOMC meeting, I think he did that more as a reaction to how dovish he ended up sounding in the prior meeting, right? In the FOMC press conference. If you guys remember, I came out and said I was really, really surprised as to how dovish he sounded. Like, we all of us want a bull market, right? And a bull market is likely going to stem only from a pivot or him going flat on rates at the very least, right? You don't really need a pivot. But even I was surprised as to how dovish he sounded. So I think he wanted to undo all of that. And in the process of undoing all of that, it happened to line up with SVB collapsing due to the rate hiking cycle, right? Because this was SVB failed because of the rate hiking cycle. It's very, very clear. Of course, they could have managed things better, et cetera, et cetera. There's no doubt about that. But Jay Powell switched his tone at around the same time that SVB started collapsing. So now people are gonna be saying, "Hey, there's no way you can keep this going." But most recently, he switched to a very, very hawkish posture, saying that if the data, like you just mentioned, Kusha, if the data comes out bad or comes out hotter, I am going to have to keep increasing rates, right? So what if CPI actually comes in hot, right? I don't think it's gonna, but what if it actually does come in hot? At this point, I think J-Pow is probably thinking to himself, damn, why? Why couldn't SVB wait just a few more days, just one more week before failing? Because had we seen CPI come in soft, right? If CPI comes in softer than expectations, then he would have had the excuse or the reason to actually decrease the pace of rates and maybe go flat himself, right? He could have said, hey, the data is telling me that I need to go soft because unemployment has actually gone up, like you mentioned. And by the way, guys, unemployment going up means that people are losing their jobs, which means that Jay Powell's rate hikes are working, which means that he doesn't need to keep raising the rates, right? So if unemployment goes up and CPI actually comes down, Jay Powell can just come up and say, you know what, it seems like what we've done is working. Let's see how it keeps going, okay?
Yeah.
Let's see how it keeps going. But now, if he actually comes in and switches his pace or switches his tone, people are going to say, you switched your tone because you broke the markets, because you broke a bank, because you caused a bank run. No one's going to be looking at the data. No one's going to be looking at data and saying that unemployment went up, CPI has come down, and that's why you're switching pace. People are going to be saying, hey, you broke the markets. That's why you're doing this. You effed up. Right, so
yeah, that's a really good point. And just to show you guys how much of a whipsaw this entire thing has been over the past, less than a week. Okay, less than a week, guys. I kid you not. I'm gonna scroll up to this. This is the Fed funds rate sort of waiting right here, where people are sort of forecasting on what the next rate hike was gonna be. Now this was back in what was the 7th of March, guys? 7th of March. So now this is after Jay Powell came out hawkish. 26.5% of people thought he was only going to increase it by 25 basis points. All right. And 73.5% of people thought he was going to increase it by 50 basis points because of how freaking hawkish he was. Okay, now why is this why is this such a big deal? Because I kid you not, guys, just one day prior to this data, okay, if I just have to show you this, just focus on this table right here at the bottom. Okay, these numbers were switched around. Okay, so this is your 25 basis points. The data points were flipped around, guys. Okay, so 24% of people, just one day prior, only 24% of people thought they were going to increase it by 50 basis points, and 76% of people thought they were going to increase it by 25 basis points. So these bars, I kid you not, were flipped on their heads. Okay, so that entire narrative switched in 24 hours. It was insane. But now check this out. After all of these events have unfolded, Sean, I'm not sure if you looked at the Fed Funds Watch tool today. Let me show you the data on there. Okay, so now take a little mind snapshot of this screen right here. Okay, so more people were swinging hawkisher. A lot of people thought that, hey, he's gonna really come in with those interest rate hikes, 50 basis points. Okay, that's where the majority sentiment was at. Now if I scroll down to today's data, check this out. Check this out. What is this saying? What is this saying?
And this may be a bit deceiving for people on first glance, right? Because it may seem like 92% of the people are switching to 50 basis points hike.
Yeah.
But no, that's not true, guys. Look down at the bar down there.
Yeah, look at the table. Okay, look at the table. This is the current rate. Okay, this is the current rate. So now, okay, the way to read this is 7.7% of people think he's not going to increase it at all. So 0%. He's not going to increase it. No increase in rates. Okay. And 92.3% of people thinks he's going to come out in the next FOMC meeting only increasing it by 25 basis points.
We're back to where we were a month ago. Guys, I shit you
not.
No,
better because
no. A month ago we were at this rate, Krisha. People are forgetting because that's how much has happened.
Oh yeah,
a month ago, people
right
were pricing in. Oh yeah, there you can see it right there. There you go. You can see it right there. A month ago, people were pricing in a 92% rate for 25 basis and a small, teensy bit for a 0%. Well, we're back to where we are. It's crazy. It's great, which is why, guys, I say trade the mango way, trade the easy way, trade the stress-free way, trade the higher time frames, or you're going to get whipsawed on the lower time frames. But Jesus Christ, man,
that's insane.
Crazy volatility.
And I keep telling you guys, these numbers are important. Why? Because ultimately interest rates is the price of money. This is going to dictate whether or not people go risk on or risk off when it comes to assets, okay? And that's how you sort of gauge whether or not people are going to be a lot more inclined to get into, say, Bitcoin, to get into some of the other cryptocurrencies, to get into some of the other equities out there, to get into real estate, right? This is how you find out how are people feeling about the market. Is it expensive to borrow money or is it cheap to borrow money? These interest rates dictate that. Okay, so that's why this is important.
Whether or not people keep their money in the bank, right? And that's one of the big reasons why this is such a big issue for the Fed at the moment, and why they may have to pivot. People aren't fully appreciating this. So Krisha, let's use your drawing pad, right? If you want to just follow along.
Yeah.
Let's say, okay, and draw this out. Let's say that the bank is giving you 1% on your deposits. Okay. Yesterday on the live Mango Alpha stream that we did, that is now private, I showed you guys that the 6-month treasury is giving you almost 5%. 6 months, okay? The 6-month treasury. That means you have to lock your money up only for 6 months, and you get a 5% on your treasury, on your bond. So maybe you'll be lazy for the first bit while interest rates are going up from 1% to 2% to 3% to 4%. But at 5%, it's really, really hard to ignore. Why would you keep your money at the bank when you could literally go to Jay Powell, give him your money, and he's going to give you 5%? Right?
That's true.
It doesn't really work that way. You're giving it to the Treasury, but it's backed by the Federal Reserve, right? So if people... If big money flees from banks, and now they have more incentive to do so because we've just seen 2 banks fail, right?
Yeah.
So if this causes money to start fleeing from all of the smaller banks and even the mid-sized banks, is going to cause bank run after bank run after bank run, right? And the thing is, Krisha, the entire business model of a bank works on taking a deposit, okay, and offering you a, like, let's say a 1% rate, and then they'll go on over to the longer end of the curve. So let's say the treasury, the 10-year treasury that's offering at the moment. Let me go ahead and take a quick look at my macro list. Give me a second. The 10-year, the 30-year, for example, is giving 3.7. The 10-year is giving 3.6. Okay, the 10-year at the moment is 3.68. Okay, so
Right.
yeah, go ahead and write that down. 10-year 3.68.
Okay, so 10-year.
Yeah.
And the rate here is 3.68.
Okay. Yeah. So what the bank is relying on doing is they are relying on, so on the front end of your scale, right? You can go ahead and draw 1% there, right? So they borrow from you on the short term, okay, and they give you 1%. Okay, they are paying you 1%, and now you can draw an arrow from 1% to 3.68, and they are capturing that spread, guys. Okay. Now you as a customer, you say, wait a minute, I don't want 1%. I want at least 5%, or I'm taking my money away. Let's change the color of your pen, Krisha, and put that 1% to a 5%, right? So like cancel it out and write 5% there, because that's the new rate the bank is going to give you. If the bank gives you 5% and they go and lend it out for 3.68%, do they have a business anymore?
No.
So this is why, by the way, an inverted yield curve causes a recession, because banks get screwed. They can't make money anymore using their basic business model of borrowing on the short term and lending out on the long term. You need your, or rather, banks need the longer term to offer a to basically make revenue, right? And
Yeah.
maybe you can get away with this for a short period of time where the banks can take losses and losses and losses, but for a longer period of time, right, it starts to really, really hurt a bank, right? And eventually they're going to have to start selling assets in order to keep facilitating those losses, right? Which is what SVB did, right? And which is why, by the way, guys, a yield curve inversion doesn't matter in a short duration of time. It's the depth of the yield curve, which over here you're seeing the depth is 5% minus
Yeah.
3.68%, right?
Yeah.
And the duration, how long you have been in a yield curve inversion. And we've been in a yield curve inversion state for a very long time. And these banks have been taking losses after losses after losses, and they've been having to force sell assets and taking losses on the assets, realizing those losses on the assets, and the short sellers sniffed blood in the water and they started freaking piling on shorts. Stock prices went down on SVB. Depositors saw that happen. They got even more scared. They flee the market. Peter Thiel comes out, says, hey, guys, I think all of you guys should be removing your money. That causes a scare because Peter Thiel is Peter freaking Thiel, right? And
Did he
done.
really say that?
He did. It was,
That's
in
nuts.
my opinion, it was kind of like the CZ effect right over there.
Yeah.
People aren't giving that enough credit.
So yeah, this is the current state of affairs as far as interest rate hikes are concerned. Now remember, if I have to take you guys back on over to the chart. So Sean, now we're going to get back into our points, okay? So now as far as this is concerned, okay, this dump here and interest rates is concerned, because that was one of the events that took place. Jay Powell coming out swinging hawk, saying that, yo, I'm going to start increasing the pace of interest rates. Be careful. I know you guys are pricing in 25 basis points, but hey, you know what? Psych. So that, I feel like they're losing points on that narrative now. Okay, and you can see that the market is not even pricing in that anymore. Okay, so we have that's sort of, I think, reservations now. If you have to put a gun to my head, be like, what are the reservations like over there in terms of interest rate hikes? I say reservations are being put to rest as far as interest rate hikes are concerned. So I'm saying that this has technically been flipped on its head. So now this, I'm going to say, is a green check mark. As far as okay, I think let's say reservations are being put to rest. The way I'm going to do it is if reservations are being put to rest, green check mark, and if they're not, we'll do a red X. Okay. So I think as far as rate hikes are concerned, I think we have a green light there. Your thoughts, Sean?
Yeah, I mean, if J-Pow decides to be stubborn over here, he's going to have to come out with some other innovative way to backstop what's going on. And we're going to see it on the charts. If the markets think that it's not enough, we're going to see that's where we can stay objective, right? And that's why I really think TA is going to be the guiding light no matter what. Okay, no matter what, because the market is going to decide whether they believe what he's doing is enough. Okay,
Yeah.
and if the market doesn't believe it, everything's going to dump, period. And we're going to use our objective tools. So yeah, let's see. At the moment, the market is saying that he has no choice, which is why I agree with your green check mark. He has no choice. So
Yeah.
it's crazy.
So and now this actually brings us, this is a great segue into point number 2, right, which is the Silicon Valley Bank tanking. And well, those deposits getting stuck, are all those deposits stuck in limbo? Does this mean that people are not going to get that paycheck? Does this mean that USDC will not get the $3 billion stuck back? Well, now we also have some closure on that sort of event right there, because, well, check this out. I'm going to take you guys on over to, well, this joint statement by the Department of the Treasury that came out, well, today, yesterday actually, for us. So anywho, I'm going to read the key points on this on the statement that was put out. And also, yes, the following statement was released by the Secretary of the Treasury, Janet Yellen, Federal Reserve Board Chair Jerome Powell, and FDIC Chairman Martin J. Grunberg. Okay.
So this was really important, by the way, Kusha, the fact that it needed to be a joint statement. What the market wanted to see, guys, what the market wanted to see was that the Treasury, the Fed, and the FDIC chairman would be working together, that they are on the same page, and they would be facilitating each other to make sure that they backstop the economy. And notice how I'm saying the economy over here, and I'm not saying the markets, because this is by all means a real life situation. Real people are getting affected. This is not constrained to just the markets, guys. People may not be getting their freaking paychecks. People may go hungry. People may not be able to pay for their mortgages, etc. if shit gets bad over here, right? So it needed to be this, right? So yeah, go on, Kisha. Sorry.
Says, today we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system. So that's why, even over here, Sean, you're right in that, they're targeting the economy as a whole and not just markets. Okay, they made that very, very clear in the statement. Now, this is the main part. After receiving a recommendation from the boards of the FDIC and the Federal Reserve and consulting with the President's Secretary Yellen, approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank in a manner that fully protects all depositors. In a manner that fully protects all depositors.
Yeah.
Depositors will have access to all of their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer.
Okay, that's interesting. This is my first read of it, by the way. So essentially what they are trying to point out over there is that I think they're going to be funding this with like reserves that they have in the FDIC, right? Basically, the FDIC insurance probably has enough to facilitate all of the depositors. That's what I'm gathering from this. But yeah, let's keep going.
And they also go on to acknowledge the Signature Bank event as well. We are also announcing a similar systemic risk exception for Signature Bank New York, which was closed today by its state chartering authority. All depositors of this institution will be made whole. As with the resolution of Silicon Valley Bank, no losses will be borne by the taxpayer. Now, this is also important. Shareholders and certain unsecured debt holders will not be protected. So basically, anyone who had equity, who held any of the SVB bank equity, they will not be protected under these clauses. Right, so people who are basically trading the bank stock. Yeah.
Really interested to know how that structure works out.
The equity holders always get screwed, eh? But hey, when the markets run, they also get rewarded the most.
Yeah,
so
that's a risk you take.
Yeah, that's the risk that you take. But now let's get back on over to our little notepad.
I do want to point out something there from that. It's just a note that they mentioned this twice now. No losses associated with the resolution of XYZ will be borne by the taxpayer. They said that twice now. I think that's like almost a political thing now, right? Because people are so sick of these big banks getting bailed out all the time. But reading this over here, Kusha, I don't think this is a bailout of the bank, because I think they did mention executives will be losing their jobs.
Yeah.
Leadership will be losing their job. This is more so to protect the people. I hope so at the very least. Again, this is just my first read of this, but this
Yeah, there
needed to
is a
happen.
mention of that.
Or
Yeah.
like, this is a situation the Fed has put themselves in, where people are going to demand they step in, because they've already stepped in so many times in the past. They're like, now you step in for us, right?
Yeah,
And this
and
is
what do you?
again.
So I have a question for you, Sean. What do you make of this statement? Finally, the Federal Reserve Board on Sunday announced it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors.
Yeah, so I think this is that discount window that you were talking about that they needed to likely open. So additional funding to eligible depository institutions. So they're likely going to be taking collateral that they do have that they can't sell at the moment, because there's likely no liquidity for that collateral, because these are like mortgage-backed securities and treasuries with such a low coupon rate of like 2%, 1%, and there's no liquidity in the market for that, because why would anyone buy a 2% coupon when, again, we talked about how you're getting a coupon of 5%, 4% on a 6-month treasury, right? So
Mm.
these are 30-year mortgage-backed securities as collateral will need to be taken in by the Fed, probably at their par value.
Yeah. So there's a lot of like very, very interesting notes to
Because
be
at the
made
moment,
here. Yeah.
at the moment, guys, what's happening is that these banks, they have all of this collateral, but they can't sell it to meet the bank run, right? To meet the people wanting to remove their money, to just feel safe. They can't sell those assets because there's no liquidity, or they would have to sell it at a major loss. So now maybe the Fed is going to try to fix that as well. Would that not mean, though, that the Federal Reserve Board on Sunday announced and make available additional funding? Like, that additional funding is going to have to come from them taking those funds or taking that collateral on their balance sheet. That's the only way I'm understanding this. Of course, I'm not an expert, and we'll do some more digging on this, but that's how I'm understanding this. The Fed is going to have to take that collateral on their balance sheet and give these banks, depository institutions, reserves to meet the demands of the depositors. This
Like,
is all pointing to an eventual pivot,
yeah,
right?
yeah,
Like
yeah.
some
So
sort of
this.
or some sort of shenanigans that they're going to have to come out with. So let's
Yeah,
see.
so
Let's see.
so I mean, there's a lot that's left for speculation in that regard, right? In terms of whether or not it's going to lead to that official pivot. But let's in terms of, well, the events that sort of played out in the past couple of weeks with Silicon Valley Bank actually, well, tanking and being taken over by the FDIC, as well as that also causing the USDC depegging, because that 3 billion stuck into the bank. Now, if you just look at these two events and the proper data points that we have in front of us, confirmed data points, is that the depositors are going to be made whole. Okay, I think that's that's the first thing that I took away from that. Depositors over there are going to be made whole. So as far as the risk is concerned over here, especially with USDC and its 3 billion stuck in SVB, that is going to be made whole once again. So if we're looking at the reservations in terms of the 3 billion stuck in SVB, I'm saying that I think that that's sort of mitigated now. That's sort of been taken away. Right now, even SVB tanking. Now, people were very they were a bit antsy about the depositors, primarily about the depositors, and well, the people who actually hold SVB bonds, right? So basically, corporate bonds for, well, that bank. I think they're also likely going to be safe. It's just the equity holders that get that get tossed around. But in terms of even the SVB tanking and the SVB bank as a whole, what are your thoughts on the statement that was published? The fact that depositors are going to be made whole, is that
That's
good
all that
enough?
matters. That's all that
Yeah.
matters. Yeah.
So I'm saying reservations of SVB and their depositors, even that is going to be fine. They're not going to let those people just like melt into dust, right? They're going to be made whole, and I think that is the key takeaway from that. So now, even now, as far as these reservations are concerned, that too technically has been put to rest, right? And so these are all points so far adding to this pump right here,
Yeah. Markets
right?
unpricing the risk.
Exactly, markets unpricing the risk. And now even they also go on to mention Signature Bank, as far as Signature Bank depositors are concerned, even they are going to be made whole,
Yeah.
right?
So,
So there's, I say that
so
all the
that's
risks,
them
yeah,
putting the fire out that is spreading, right?
yeah,
Signature Bank is like, oh, the fire is spreading. They're like, no, no,
yeah.
no, no, don't worry about that, guys. We got that too. We got our fire truck here. We got our hose. We got a bunch of water, and we're going to be tapping into liquidity if we need to. So
So the way I'm looking at this, Sean, is that the four key events that technically led to this dump, contributed to this dump, have all sort of been put to rest now, right? And now we have this event now. While this rally likely started because of anticipation for the announcement, I think the announcement was good enough to sort of squash all the
yeah,
risk that was sort of priced in there. So if we really have to now, if you had to ask me, Krisha, is this a bull trap or was this one big fat bear trap? This so far, just based on all the risk events that took place and all the statements that was released in the past 12 hours, this is looking more of a bear trap than a bull trap to me.
yep, yep, totally agree with that. Totally agree with that. Like if you guys only look at the TA, and which is why at the end of the day TA rules all. If you look at only the TA and look back at this juncture in hindsight, where you ignore all of the um, macro nonsense that is going on, you're going to look at that and be like, hey, that is a bear trap. That is a classic bear trap, right?
Yeah.
Especially if you look at your 4-day dynamic, right? If we've not closed yet, but if we you're looking at the weekly, the weekly, by
Oh,
the way, guys, look how
yeah.
well it defended the
A
weekly
4 day
dynamic.
4 day
Yeah,
dynamic. Here
4-day
it is.
dynamic. That's your bear trap right there. When you see something like this where you close underneath and immediately you take out the low of the previous candle and then close above, that is a classic bear trap. That is a
Yeah.
classic bear trap, right? That's how you need to look at it. And as to whether or not this is a bull trap, guys, unless you are deliberately playing a bull trap, where you have a certain signature that you're looking for a bull trap to get activated, you never really know whether something's a bull trap. That's the entire point. You just get trapped because what it means is that your bull signatures have gone off, forcing you to enter a trade, and then the market reverses immediately, trapping you on the other side. That's
Yeah.
the entire idea. So that's what happened with the bear trap right there, right? It's been an educational segment for everyone at the very least, right? These past few days, at the very least, should have been massively lucrative for your education. So relish these days, guys.
Yeah, yeah, for sure. I think we have like hell, we probably had like months, years worth of events sort of play out in a matter of 1 week, right? So now it appears so far for Bitcoin is that it's taken the elevator down, but it's also taken the elevator back up. And that is also like your classic bull trap sort of sorry, bear trap price action right there. Now, as far as just the TA is concerned, yeah, you know what, Sean, you're right in that if you just look at the TA, this is looking more of a bear trap than a bull trap as far as the TA is concerned. But in addition to that, let's sort of leave the traps out of this and let's well, look at the data that we have presented in front of us in terms of, well, number one, the dynamic indicator. We've created that so that it might keep us on the right side of the freaking market, right? So now we did open a brand new weekly candle today. Right, so let's start off with the weekly open, and let's look at how Bitcoin actually fared up against that dynamic that's supposed to be keeping us on the right side of the market. So how do we perform on that? Now, for those of you who have been following my analysis for some time, you guys know that this weekly dynamic is one of our bull run triggers. Right, now we actually managed to hit the check mark on that bull run trigger at this juncture right here. Right, where we actually took it out, we got the tempo that went off, and also we have the dynamic that turned green. Now, question is, did we lose it on that previous weekly candle? And no, we did not. Look at the freaking wick off of the dynamic. Now, you're not going to get a clear visual on this because I'm using the index chart, so let me just switch charts very, very quickly for you. Okay. And that's good enough. Yeah, this is what the weekly looks like so far on the dynamic. So this bull run trigger, guys, is still very much active. Sean, what are your thoughts right now on the weekly close with price relative to, well, the dynamic or any other indicator that you are looking at for now? Is there anything else that you are looking at?
Well, yeah, if you guys are taking notes, like I asked you guys to, especially on the monthly closes where we did the entire theme of the good, the bad, and the ugly, you remember that I said that, hey, if we close underneath the green 55 EMA for the rest of the month, we only play the higher time frames, mainly the monthly and the weekly, right? We try to stay away from the low time frames at the very least. I understand that we had a risk event and you got to manage your risk against a risk event like this, which is what I did. I most definitely did. But again, this is again why TA always ends up being the 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 king of all decision making. Because remember, before the monthly close, we said, hey, if we close underneath the green 55 EMA in the monthly, right? So Kushal, could you turn that on for them?
Yeah.
To clear everything else off, right? And yeah, there you go. You can turn off your 21 EMA. There it is. Kusha has the entire setup right there. We said if we close underneath the green 55, then unfortunately, right, we are going to be closing under resistance, and you have to treat that as resistance until we claim it, right? And if that is resistance, you look to your next SMA as your support. And the SMA that we've been looking at for months and months was
So,
the 10
and
SMA, right? And let's say you just played that, okay? Let's say you just played that. Now, I don't want to say I did. I wish I did. But let's say you just shorted on the green 55 and took your profits on the 10 SMA and longed over there. Look how perfect that ended up being,
yeah,
right?
that was
Now,
really good.
now that's how simple your mango trading can be. Now, at the moment, I'm trading a bigger thesis, right? I'm trading a bigger, longer term thesis over here, which prevented me from putting on that trade because that would threaten my position. But this is, if you guys weren't already in long position I was in, that I built up at around the 17K, 18K, 19K levels, right? You guys could have been putting on that trade instead, right? So it can be that simple, guys. It can be that simple. Using only your high time frame levels. Yes, you got to be a lot more patient, but look how lucrative it can be.
And this played out to the T. I mean, no one expected the events that would lead up to it, but this played out really, really well.
Now,
And so,
Kusha, do you think we close above the green 55 at the end of the month? There's an argument to holy shit. I think it's
shoot,
gonna happen.
yeah, I mean, it could happen. I think if he actually comes out swinging freaking dovish as hell, it could happen. But I'll say this right now: just if you're looking at the monthly range, if I'm just speaking pure TA, if we're just looking at the monthly range, which I have now highlighted on my chart with the 55 EMA and the 10 simple. 55, guys, if you guys want to take note of it very quickly, 55 comes in at 23.4K, 10 SMA comes in around 20.5K. If you're looking at this current juncture, and I just go ahead, now, Sean, you already know my tricks on this, right? If I go ahead and mark out that freaking midpoint, and I'm looking at the damn closes along the midpoint, I'm saying that the bulls actually have the edge here on this most recent close. Okay, like look at how the daily closed against the midpoint right there, right? We've taken it
Defending
out,
the
we've
golden
defended
cross.
it as support, and it appears right now that we have a higher probability of getting up to 23.5K than getting back down to 20.6K. Okay, in addition to that, if I just have to show you, I'm gonna knock off the 10 SMA for now, and I'm gonna knock off my lines for now. We were looking at that golden cross. Now, once again, guys, I know I sound like a broken record at times, but these are important signatures, and if you miss out on these signatures or you forget about them, you're missing the bigger picture here, right? You're not positioning for the cycle because now suddenly you're focusing too much on the trees and losing the forest. And we have that golden cross right there, that daily golden cross. And when we emerge out of a bear market phase, so this is the cycle, right? This is 2 cycles right here. Every time we emerge out of the bear market phase, the very first golden cross on, historically, it is lined up with the next sort of markup phase, getting into the next bull run. And this happens once or twice every cycle. Right, these are very, very important signatures, and so far with just the given price action that we have, so yeah, fine, we lost the 200, you know, we came all the way down to the 200 simple moving average, but with this price action, what this does is that now that that entire risk of losing that golden cross right there is mitigated, right? If we actually continue to the upside, getting up to the top of the range at 23.5K, I'm saying this golden cross stays intact. So I'm looking at these signatures and I'm just like, the TA is saying that the bulls might actually have the edge here getting into the end of the month, right?
Yeah,
What are your thoughts on the daily? Like, how are you liking the daily? Is there something that you are seeing that I'm not seeing? I missed the freaking 200 simple, man. I freaking
Oh
missed that.
no!
I
How?
did
No, you
see it.
could not have missed that.
I mean, I had a level
It
there, but
means
I
you were
totally
ignoring me. I
missed.
literally, we were sitting on the couch together, and I'm like, Krisha, this is bouncing on the daily 200. Krisha, this is bouncing on the daily 200. Like, how?
Sh-
She's
I think
focusing
I
on
think
something
one of the most
else.
epic things Sean did in the past 24 hours, guys, I kid you not, I was in the kitchen yesterday, and I was eating cake. I was not even cooking away. I was eating cake, and Sean just walks in, and I had my headphones on, and he's trying to gesture at me, and I'm just like, what? I hate taking off my headphones. Anyways, I took it off. He's like, I'm on a buying spree, Krisha. I'm buying everything. I'm like, oh yeah. He's
Wow,
like, yeah,
make me
yeah.
sound like a
He's
little
like,
child.
no, but I mean, I trust you. The thing is that when you're excited, it's not like me when I'm excited. I am like a little child, and sometimes I'm also buying up against resistance. It's a recipe for disaster. But when Sean is excited, these are very rare moments when Sean is excited. So when he's excited, I'm like, yeah, go in, full throttle. So yeah, he's like, I'm going on a buying spree. Is there anything that you want? As if he's buying me shoes or something. But so I think that was really cool. So Sean actually managed to get some fire deals last night. Sean, how are you feeling about those trades?
I'm feeling okay. I'm feeling okay.
Okay.
I wasn't able to get in everything. I was just being a tad bit more cautious than I like now back in hindsight. But I did get in at least 75% of everything that I did want to. So yeah, yeah. Between the time of this recording and when the markets open now, I do think that we're going to have some time for pullbacks at the moment.
Mm.
If you guys are looking to short into any potential bull trap, these levels would be it, right? Like, because I do think that if markets close above these levels, we're going to see further upside, but we could reject these levels and there will be profit taking at these levels. Because a lot of our coins, Gusha, have bounced like 30%,
Yeah,
40%, man.
yeah,
There will be people taking profits
yeah.
on those coins. So I think those pullbacks, I'm going to attempt a long on those trades, on those coins. And if they don't work out, I'll just exit the entire trade, right? But for now, I'm trying to keep a clear head. I don't want to get too excited too soon because usually when I do, I make mistakes. So
Yeah, I think that's really good advice. There is still a very bit of uncertainty out there. We have an important print coming out tomorrow, and then we have the FOMC meeting taking place in around 10 days or
yeah,
so, I believe.
that's gonna. No, wait. There's an
So,
FOMC meeting coming up. One more on the market open. I think around 2 or 3 hours after the market opened, right? So
wait,
I
what?
think
When?
yeah,
Like,
yeah, like
like
tomorrow,
tomorrow?
like today, yeah.
Oh, okay. Sorry, that's the date I
So
missed then.
yeah, so that's going to be important too. And I think the market might be pricing in at the moment, the market might be pricing in any comment that the Fed will make in regards to their forward guidance, which is going to be a week later, right? They're going to be saying something or likely going to be saying something in regards to how they're going to be positioning interest rate hikes or going flat or perhaps a cut, right? I don't think the market will be expecting a cut, but let's see. Let's see. At the moment, maybe there's some of that priced in, right? So maybe that gets priced out now, or
Yeah.
maybe they price out a bit too much, and J Powell comes in and confirms only a 25 basis points hike or going flat. If he goes flat, I think we're going to see a rally, right? So
Hmm.
if we see a pullback into key levels, like maybe on okay, so for example, Krishan, I'm looking at altcoins at the moment. I only have
Yeah.
altcoins opened up, but if I switch back to Bitcoin, you switch to your daily dynamic, right? What bothered me about Bitcoin was that man, it made it really difficult yesterday before going to bed because it was smack up against the daily dynamic, right? Which made me kind of hesitate a tad bit on a few altcoins, right? Because we're up against daily dynamic, we're up against 4-day dynamic. So the combination of the two made me go like, okay, midterm resistance. So I'm not going to go too aggressive on all coins. 75% of my allocation is good enough. I'm going to leave a bit in case we do get the pullback. But now look at that. We kind of opened above and we're living above the daily dynamic, and the 4-day may likely close above as well. We don't know that. We have, I think, 16 hours for the 4-day to close. Yeah. So the 16 hour, so we have a daily close and the 4-day close coming in together. And they're both going to confirm above their dynamic levels if things stay here, right?
Yeah.
Which is why it's going to be a very important Monday. Very important Monday. So We're going to either undo a lot, or JPAR is going to come in and not give people what they thought he was going to give them, which is essentially him softening up. If we don't get that, the markets are going to reflect that. We're going to close underneath those levels on the 4-day, on the daily dynamic, and then we're going to see further downside, right? So let's see. In which case, we'll have to update you guys on how we read market conditions and whether or not we're going to be bidding the higher low that is going to be coming in the mid time frames.
Yeah. So we'll give you guys updates. But guys, if you want to talk more on, well, the whole macro market stuff, get into the Discord chat. Like, we got some like really, really cool people, and they're very smart people, and they're also keeping up with what's happening in macro. And yeah, there's a lot of good discussions to be had in the Discord chat. So make sure you're joining the Discord chat. We might actually close it off getting into the next bull run. Okay, so just a quick heads up on that. Now, I'm just going to go over a quick recap on some of the bull run triggers, Sean, that we have. Now, these are just some of it. If you guys are in the Mango Seed program, we actually have an entire sheet for you guys in terms of all of the bull run triggers that we're looking at, in addition to some of the major targets that we're looking at overhead. So, yeah, make sure you're checking that sheet out, okay? I will be updating it today, so just a quick heads up. Now, as far as the monthly bull run trigger that we have, that was primarily hinged on the oscillators, right? Which, Sean, is still crossed bullish, right? Now, we'll get a better tell on it getting into the end of the month, but yeah, this is still in bullish territory. How about the weekly dynamic? We just went over that. Currently living over the weekly dynamic, closed over the weekly dynamic. So far, this is looking more of a bear trap than a bull trap. Now, how about the 4-day dynamic, which was the next one? We close. Now, we are going to get a resolution on the 4-day dynamic tomorrow. Okay, Sean, if we close over the 4-day dynamic tomorrow, what is your how would you be leaning on this?
Again, my rules are going to be forcing me to be bullish again, right? So
Yeah.
I'm kind of already 75% pre-positioned. I'll be allocating more, and yeah, let's go.
So,
I'm excited for that. These past few days, I've had to break a few rules in regards to sleep because I would have been caught out of position, right? So the way I was looking at my entire positioning over the weekend was that I am short my core positions because I have a longer term thesis, a bull market thesis that is still in play, right? It's still intact. Could you show them the screenshot that
yes,
from my stream from 2 days ago? Yeah. So guys, this was my read on the stream from 2 days ago, right? I said, guys, the low time frames at the moment may be indicating a reversal, right? Because they're showing momentum for a reversal. Those low time frames may influence the mid time frames, and the mid time frames at the time 2 days ago looked like garbage. But if the low time frames influence the mid time frames, they will flip. You guys can see that I wrote flip over there, right? And that's what we've seen right now. The mid time frames have officially flipped. They've not confirmed yet. We'll get that confirmation in 16 hours. But the high time frames, even though the weekly had lost structure, right, the monthly was still intact. And by the way, guys, the weekly held its weekly levels. It lost structure by taking out the lows, but I also said in the stream that I'm so used to the weekly doing this constantly, right? The weekly often loses structure in a bull market, but it continues on anyways, right? So my high time frames are still intact. My our lower time frames were still looking good, or at the time were looking good. It was only the mid time frames that needed to flip, but the mid time frames were the key, right? The mid time frames was where everything turns around. Like, you can't wait for the high time frames constantly, right? Because if you're positioned on leverage, guys, the monthly is freaking all the way 20 days away, right? So a lot can happen between now and then. You could get your stops liquidated, and then the monthly could close well either way. So now, however, the mid time frames are beginning to look good, and they may confirm. The low time frames use their momentum to flip the mid time frames, and the high time frames have always been intact. The 1 month is still intact. We talked about that. Kusha just mentioned the stochastics as well. There are other things that are looking fantastic too.
Yeah.
So that's my read.
And just to drive in one more thing before we wrap up today's video, guys, for those of you who have access to the Mango dashboard, now we have like this new nifty freaking feature. Massive props to the devs. But if you actually looked at the trend, Sean, on the weekly time frame on the dashboard, that never flipped short. It did
Mm,
not budge on the
BTC Dump.
weakness, right? And now check this out, guys. Okay, I'm on the dashboard. app.mangoresearch.co is where you can find it. And you'll see a little arrow there now next to Bitcoin, USDT, and all of the other altcoins. Now, if you just click on that, you're going to get this drop down, essentially giving you that multi-time frame sort of breakdown of what all of the trends are seeing across time frames. So from the 4-hour all the way down to the weekly. Now, you can see here on the weekly time frame specifically, guys, Bitcoin was long. Long equals bullish, for those of you not aware of the lingo. That never flipped, okay? That's been bullish for the past 42 days. 42 days. So this technically kept you on the right side. Like, you would have still sort of been in this entire move. You would not have let go of your long-term allocations there. I need to stress the term long-term allocation. But so far, we're seeing Sean's entire momentum play actually picking up on the dashboard and showing itself on the dashboard. 4-hour flip, long momentum building there. 7 hours ago, you're up on that trade. Okay, now we're seeing the 12-hour and the daily. This was short before, this now flipped neutral. Okay, telling us that we're about to see that long trend cascade on over to our higher time frames. Okay, the bears are losing their momentum on the 12-hour and the daily time frame there. So now all we're waiting for, Sean, over here is on the 2-day time frame to flip neutral as well.
Yep.
So yeah, we're seeing a slow cascade of trends. So keep your eyes on this, because you're going to get your next trade opportunities right here. Volatility swinging 96 on the 4-hour, telling us that, hey, we might see a pullback soon. Okay, so yeah, watch for how price plays out during these market junctures. We have a critical event coming out tomorrow with who's speaking tomorrow? Is it Jay Powell?
It's the entire FOMC board.
Okay, so we have that. So we'll be weighing in on what comes out of that meeting, in addition to what comes out in terms of the CPI print. Okay, also coming out tomorrow. Lots lining up. So yeah, this is today's Bitcoin analysis. Sean, is there anything else that you want to wrap up with today?
No, it's every birthday that Kusha has ends up with a massive event like this, where we end up not getting any sleep and not ending up celebrating Kusha's birthday all that well. But yeah, it's just surprising it happened all over again. It's just freaking nuts.
And also, guys, what was I gonna say? Yes, the birthday sale is still on. Someone did PM me, thinking that was only for the day of. No, the
No, it's
birthday
gonna be a
sale
week.
is. Yeah, okay, it's
run it
okay.
for a
It's
week.
okay. Yeah, so it's gonna be on for a week, and the coupon code I will be attaching on the screen. But as far as I'm aware, I think it's Krisha-B Day. Okay, so yeah, I'll attach in the description, as well as you'll see it on one of the cards on the screen here. That way you guys can just copy paste. Cool beans. Now I hope you guys enjoyed today's analysis. This was more of a macro update. Once again, timestamps in the description below if you guys want to go and revisit some things. And Sean, do you want to end it off?
Until the next one, guys, do the mango way, do the easy way, do the stress-free way. Ciao.
Ciao, guys.